Futures trading is risky and can result in substantial financial loss.
Good evening, traders. Welcome to Short Term Trading Live with Oscar. Right off the bat, we'll talk about what happened in the S&P today. We talked about this utopic possibility of trading on Planet Utopia. Holy sugar, honey, iced tea, did we nail that one? I don't know where that one came from. We gave you a rec yesterday for today's trading. Buy March S&P 1420 and a half and get out if you trade 1436. We traded down to 1420.70 and took off to 1435 and a half. Who knew? What a call. But I didn't get in, and we're going to talk about that in a few minutes. There's discipline involved in trading, and you'll see why. I got a bunch of emails and calls from traders saying, why don't you give us a wider entry level, or you could have gotten in and made so much, why didn't you chase it? There's a lot of strategy involved in trading, and if you'll indulge me, after I give you some trade recs for tomorrow, I'm going to give you a little lesson on discipline, strategy, how to remove your emotions from trading. So if you want to stick around after the recs, I'll see what I can do to help you out in your trading style. Okay, for tomorrow, we're going to buy, for tomorrow, trade date, Friday, 1/12/07. We're going to place orders to buy March S&P at 1428 and a half. We're going to place a sell stop at 1420 even. It's the March contract, SPH7 would be your Emini contract symbol for the electronics. We're going to take profit at 1443 or be out by the close again. Buy March 1428 and a half. Place your sell stop at 1420 even. For protection, of course, in case we're wrong on the trade, and look to take profit at 1443 or be out by the close. We like the corn. I don't know if you saw that nice jump today, 17 cents at one point. That thing was rocketing. I think I'm going to try to buy corn on a pullback tomorrow. March corn. You can buy March corn at 371 and a half. Place a sell stop at 364 3/4, protective sell stop. Look to take profit at 389. There should be some resistance noticed at around 384. So keep an eye out around the 384 level. Will we go up? Hey, I know about as much as I did yesterday, but my calls have been good, so let's give it a try. We also want to take a look at soybeans. Wheat. Soybean trade didn't work out, so I found the wheat trade, that looks a little better than the soybean did. March wheat. We're looking to buy March wheat tomorrow at 454 3/4. We would place a sell stop at 449 1/4 for protection, and we're looking to take profit at 468 3/4 or be out by the close. Quick recap on that again. Buy March S&P 1428 and a half. Place a 1420 even sell stop. Take profit 1443. Place an order to buy your corn 371 and a half. Place a 364 3/4 sell stop. This is the March contract on all three of these. And look to take profit at 389 with the possibility of resistance coming in around the 384 area. The wheat 454 3/4 buy it. 449 1/4 place a sell stop. March contract. Look to take profit 468 3/4 or be out by the close. Now, as I said, I wanted to talk to you about, answer some of these questions about why I didn't get into that trade. You want to talk about discipline. If you want to be a good trader, discipline is number one. It is the thing you need to learn. And I'll tell you what discipline means. I sat and I watched an S&P market today go up $15 to a level I was looking for, and it started at a level I wanted to buy at. I wanted to buy at 1420 and a half. It got down to 1420.70, and then it started to pop, and I didn't get in. And it went higher, and I didn't get in. And then it was $5 higher. I still didn't get in. And I had as much enjoyment watching the trade go without me as I would have being in it. And I'll explain why you cannot just chase a trade. People wanted to know, okay, look, if you were looking to buy it right here, it could be any price. It's a chart. We're going to buy it right here. If the market comes to here and doesn't quite hit and starts to go up, traders want to know, why don't you just jump in and buy it there? Well, here's the reason. If you look back at most of the trades I've given you, and we've been successful on them, they've come to the spot, have gone back up. Sometimes we miss the trade, sometimes we haven't, but here's the lesson to be learned. If you're going to buy here, and your stop is here, you're risking any number, any market, let's say you're risking $500. Now, if the market gets close to your buy entry and turns around and starts heading back up, you're going to run into a little bit of a problem. If you jump in and just try and buy it, let me clear a little of this board for you, because I want you to see this. If you try to walk in and buy this thing after it should have hit your spot, just missed, starts to go up, and then you grab it. Now, you used to have a $500 risk, right? But now that you bought it higher, you jumped ahead, you lost your discipline, you said, oh, I missed it, and you jumped in. And here's what's going to happen to you. If it stops cold here where you bought it and starts heading down, your $500 stop has now become a $1,000 stop or a $1,500 stop. Because you came in with a trading plan. You sat last night, your children were asleep possibly, everything was quiet, you looked at charts, or however you do your analysis, and you came up with a methodological approach to trading these markets. Now, the market opens in the morning, the markets get close to your numbers. Should you start making new decisions now that the market's open and there's pressure on you? Absolutely not, because now you're no longer systematically approaching the market. We're short-term traders here. We don't mind a market coming down. If it doesn't hit our spot and it goes away, fine. Because again, if you had purchased it and you were wrong, you had a way bigger loser than you ever had planned, and you just took away some of the profits that we've worked so hard to make. Again, so what do? Do you move your stop up to here? Now what happens is you bought too soon because you jumped ahead. The market turns and finally goes to the spot where you should have bought, but that's where your stop is. You blew the whole trade out the window. You can't go chasing these trades. I sat and watched that trade go up all the way to 35.5, and I would have never jumped in and touched that, because think of how many times you jump ahead of your numbers, you grab a trade, it turns out to be wrong, goes down and hits your stop, but now the stop's way bigger than it was. Do you get that? If you have a trading plan and you have a stop for X amount of dollars of risk, if you do not get in where you planned, your risk suddenly changes. If your risk grows and you do lose, now yesterday's trading that you didn't jump ahead of netted you a few dollars, but the trading that you did jump ahead of lost you even more. You see, you got off your methodology here, and your methodology you got off of, and you started guessing. You cannot pray to the gods of trading. When it comes to trading, you have to stick to your plan. So again, discipline, discipline, discipline. If you miss it, we'll try it again tomorrow. You cannot chase these markets. We're short-term traders. We want to know what happens at the end of the year with all our short-term trades. Not, oh, we should have stayed in and we could have caught that big one. Little trades, little trades, little trades. The big ones, because we're short-term traders, we probably never catch. We catch a piece of it. We're short-term. If you got in yesterday, let's say it traded 14.20.70 and you got in. If it traded 14.25, you could have been out and been happy. Don't cry that it went to 35 and you weren't in. You took another short-term profit, right? Short-term profit, short-term profit. So now when the big trades come, you're still a guy in it, or a guy, girl, sorry about that, taking short-term profits. But you take a short term, you take a short term, you take a short term, and you're done. When the long-term profits come, usually you've only caught a small piece of it. But here you go. Any great trader catches 30% of any move. It's a fantastic thing that he did. You don't want to catch 100% of a move. You catch 30% of the expected move, you've done a fine job. Keep that in mind. I'll give more lessons as time goes by, as I get more questions and I see where the problems lie. But remember, if you're going to chase the market, you've gotten off your plan. You've changed where your sell stops were. You've now changed where your risk-reward ratios come in. And now your trading plan has gone out the window. And if you start making emotional decisions about your trading, guys like me will take the money right out of your pockets. Good luck, traders. Don't forget about your trades here. It's S&P. We have corn. We have wheat. We hope you make some money. We had a fantastic run for the last 10, 12, 13 videos. We had a losing day, one losing day. We had one losing silver trade, however, we flash updated you to get you out of that trade. So, again, we took a quick profit that day. If we didn't take our quick profit that day, we'd be right in this scenario that I tried to tell you, that I've been telling you about. Whereas we got ahead of ourselves and had a major loss. Thank goodness that didn't happen. We're up really good this week. Go back and look at the videos. You'll see we've made some fantastic calls. Where the S&P came from yesterday, I don't know, but I will do it again and you'll see. Good luck trading. I'll come back to you with another video tomorrow. I hope you make money on the trades.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.